It's about that time of day again, folks. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Monday evening, July 6th, 2015. We get a jam-packed newsletter in store for you guys and gals. Hope you guys all had a great 4th of July. Hope you had a great Independence Day. I hope you paid attention. Did you come back with all 10 fingers and toes? That's the most important part. Did we bring all the fingers and toes back from the beach? Hopefully you did. Hopefully you had a safe, restful, relaxing, somewhat short. It really went by fast if you were having fun with family and friends. So welcome back. Had a great day in the trade room today. Markets all gapping down over the long weekend. We got the no vote from Greece. You know how it rolls, though. We're going to jump right into those charts in a couple seconds here, though. I do want to remind you, though, before we jump into those charts for tonight's newsletter, I teach everything we're going to talk about here tonight. I teach it all to our students. We have beginner, intermediate, and advanced levels of membership at schooloftrade.com. Check it out. Get a great free trial on the homepage. Also, want to make sure to remind you all to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. There are 3 reasons why you should be navigating over to sidewaysmarkets.com to watch this video. If you're watching this video on our YouTube page, there's a link right below the video in the description that'll take you right to this page. First of all, you can download all the charts I'm going to use today. All the charts you see me using in today's newsletter, you can download those right below the video. Second thing, I have a free pass for you, upper left-hand corner. If you'd like to be a student for a day, come in, join our trade room on a free pass. If you're not a member of School of Trade and you'd like a free pass, come out and attend our trade room, upper left-hand corner for that. And, of course, lower left-hand corner, I have a mailing list for our nightly newsletter. You'll never have to worry about missing another newsletter ever again. All I need is your name and your email address, and I'll send you an email every evening when the newsletter is ready to be watched. Pretty good deal, huh? So download all those charts for today right below the video. Grab your free pass. Come out and join me in the trade room as a guest. And, of course, don't forget, join the newsletter list. If you join the newsletter list or you grab your free pass, I'm going to send you a verification email, so make sure you check your inbox. I'm going to send you a verification email, so make sure you check your inbox, your spam box. You can verify we have the right email address. Let's jump right into it here, boys and girls. Once again, hope you guys had a great patriotic weekend. But I'll tell you, what a great holiday, 4th of July. I definitely spent a lot of time outside enjoying our time with family and friends. Hope you guys did too. Starting here with the Emini SP. Big gap down over the week. We knew there was going to be some gaps here coming into this morning because we had the Greek referendum was voted. You know, they voted no, and of course, who the heck knows what's going to happen next. I'm not worried too much about what's happening in Greece. I'm really worried more about what I'm seeing on my chart. So, big gap down here today from the S&P. That big gap down sent prices all the way back up, and they filled this gap here before noon today, right? I mean, it didn't take very long at all to fill that gap. It completely refilled that gap. You can see an example. We've had a couple gaps here over the past few weekends. These summertime gaps are relatively common because, remember, over the weekends, right, markets close electronically between Friday evening and Sunday evening, and sometimes these markets can get pretty crazy out there over the weekend. So, again, gap down here over the weekend, filled that gap, no problem at all. S&P is bearish, and now we're up near the highs of the channel. As you can see here, we get a long-term bear channel. We're definitely bearish right now in the S&P. I'm going to be looking for selling opportunities, right? Those will be the best long-term trading opportunities right now. Sellers, if you're a bear right now in the ES, you're looking for the buyers to try and fail at the highs. And buyers, you guys got to take your profit off that gap fill. You're pretty much where you want to be taking your profit now if you're a bull right now in the S&P. And now either wait for one of two things. If you're a buyer right now, you either want to wait for this price to retest these lows and then look to buy it back up. Or if you're a bull here on the S&P, you've got a measured move target to work with up here. Okay, so that's going to be your target here if you're a bull right now in the S&P. Many reasons why I could see justifying being a bull on the S&P right now. I'll trade the chart. The chart's a bearish chart. I'll, of course, look to get short here. But, again, I'm sure we got some bulls out there watching here, tuning in. What's the best way to be a bull? Again, either to wait for price to pull back and buy at support, or wait for sellers to try and fail, try and fail, try and fail. So basically what you're doing is you're waiting for the buyers, you're waiting for the sellers to try to sell these resistance areas overhead, and then look for those patterns to fail. That way you can buy right into those stop losses. Just remember, though, if you are a bull right now in the S&P, you are swimming against the current here, right? You are trading counter trend, which means every counter trend trade is unreliable. So make sure you tighten up that stop pretty quickly. Grab a quick first target, tighten up that stop, remove any risk on the trade, and try to hold that, small portion of it as a runner. What if I'm a seller right now? If I'm a seller right now, I'm looking at resistance areas overhead. You can see quite a few of these red levels of resistance overhead. You can also be looking for the buyers to try and fail, right? So remember, there's really three ways we can take this trade short. The first way is going to be a buyer failure, right? Look for the buyers to try on a pullback there, and basically look for the buyers to try to buy into resistance and sell into their resistance. I'll be trading this market in real time tomorrow morning with you guys and gals, so don't forget, we're watching this stuff a lot more closely tomorrow morning. Second way to do it would be to look for a reversal pattern, right? Look for a reversal pattern, right? So draw the trend lines up, break trend line, right? New low if you're a student of mine, or if you take my trial, right? Don't forget, you can learn more about that reversal pattern on my free trial as well. Also, third thing, what's the third way you could sell this thing? Wait for it to make the turn and then sell short on the way back down. Sellers, you got some targets waiting for you. These targets will also be where those buyers, right? All you bulls out there can be looking for the best buying opportunities here. Careful if you're a bull right now. You're right up near the highs. Sellers, be looking for those buyers to buy a pullback and fail for the easiest money, or wait for the reversal pattern off these highs, or wait for price to make the turn and then sell those rips, right, as we go back down. Bearish on the S&P. We've gone above the moving average, though, so we'll probably see a pullback or two here, try to go higher. Once that fails, that's going to be our green light here to be a seller on the S&P. Let's keep going. How about the euro? The 6E, the euro currency futures, euro is bearish, but trading near the lows of the range. A little bit of a flip-flop here between the S&P and the 6E, the euro. So euro is bearish, trading near the lows of the range. Our best selling opportunities will come from bull traps at the highs of the short-term ranges. And buyers, you guys really got to be careful here. Again, just like I talked about on the S&P right now, you really got to be careful. You're in a downtrend here on the euro right now. We get a little bit of a waiting game happening with Greece. So if you're a buyer, you really got to be patient right now, either buying where the sellers try and fail at resistance overhead, or the best trades for buyers out there, hiccups, are going to come at the low end of this range. Okay, so we got a bearish trend on it. Very easy to see that. Don't forget, you got to keep in mind the fundamentals that are going to be plaguing this market right now. All eyes are on Greece. The Eurozone is all watching to see what's going to happen in the soap opera they call the bailout, right? The ELA funding, all the drama that's happening out of the Eurozone right now regarding Greece. So you're going to see a lot of these range-bound moves here on the euro until this all gets worked out. So what's the best way to trade a range? Traps, right? Traps, absolutely. So right now, sellers first. Sellers, your best bet right now is to look at these resistance areas here. Wait for those areas of resistance. Wait for the buyers to try to buy the high and then trade it as a bull trap. So basically, sellers are looking for the best opportunities at all the resistance areas. If you're a student of mine and I say the word bull trap, you know exactly what I'm talking about, right? So we're looking for price to try to go above that high, buy. Oh, they failed, right? We take it right back down. Look for the bulls to try and fail just as they poke their head above these resistance areas. That's going to be the easiest money to make. The next best thing will be reversal patterns at all of these, again, resistance areas overhead. And then, of course, last but not least, you could just wait for the price to go up, and then once it starts going down, right, we'll start taking those retracement trades, those wave patterns short on the way back down. If you're a bear right now, you're going to wait to sell at resistance overhead, whether it be with a reversal or a failure, and you've got some great targets waiting for you to the downside. What if you're a bull right now? Get a really difficult job if you're a bull right now. If you're a bull right now, your best bet's going to be to buy those lows, right? Keep buying that low. Just remember, though, if you're a bull, you are trading counter trend. What does that mean? That means every trade should be suspicious and every trade's a scalp until proven otherwise. Tight stop, tight first target, move that stop to point of entry, lock out the risk, and try to leave another small portion of that trade to run, right, as it goes higher. So again, if you're a buyer here looking to buy these lows, looking to buy these support levels, but again, you're buying right into a downward trending market here right now. Really, the only saving grace that you bulls have right now to be buyers here at these lows is being at the low of the major range, right? So we're looking to buy the low here, we're looking to buy here. Now, what I would do is, though, if you're a bull right now, as I always say, the easiest money you're ever going to make is trading into the opposite side stop losses. So what does that mean? Well, that means if I'm looking to buy these lows, just wait for the sellers to try with a wave pattern short, right? Remember, traders, as a seller, I don't want to sell these lows. So find some of those poor suckers out there, maybe not poor suckers, but uninformed, uneducated traders out there who you can say, okay, their stop loss will be right above that wave pattern here. I'm going to buy right into that stop loss. It'll throw me right at my first target, quick first target, tighten the stop up, hold on till you get to the highs of the range. Just don't get greedy as a bull right now because you are going against the trend. Buy those lows if you're a bull. Sell those resistance highs if you're a bear right now on the euro. Relatively easy plan here on the euro. Again, the biggest problem that you're on the euro is being patient because you're going to have times where it gets really slow as these traders are kind of sitting on hands waiting for this issue to come through in Greece. All right, guys, that's your euro. Shall we keep going? How about some gold? I'm going to save the best for last. I got to save crude oil for last for you guys. This thing almost went 5% lower today. Jeez Louise. Okay, how about the gold here? This looks pretty darn similar to the euro, doesn't it? It is. It's very similar to the euro. Why would that be? Probably because it has a negative correlation to the dollar. You know, gold and the euro is very similar. It has a fundamental correlation, negative correlation to the U.S. dollar index. Right? The U.S. dollar index, a basket of currencies. The biggest currency, though, in it is the euro. That's why when the dollar goes up, the euro will go down. Well, gold, of course, is historically known as being a safe haven market, right? So when the value of the dollar goes up, gold will come down, right? So on and so forth. So as our dollar is worth less, people take shelter in gold, gold demand goes up, prices rise. So we know right now there's that negative correlation. That would explain why gold and euro have very similar tendencies. They're not going to be correlated all the time, all right? This world is not that simple. That's why I always tell people when they ask me about correlation trades, I tell them, good luck, You're going to need a big account to absorb all the losses that you take while you're learning, and you better get a comfortable chair because to learn how to trade correlations, you've really got to have some extreme amounts of experience. I personally have never seen anybody be able to make a consistent profit over a long term, right, with correlation trades. While everyone's worried about correlations, I'm worried about what's happening right now. I don't care about what other market's telling me. What's happening on this chart right now, because what correlations don't give you is entries and exits. They do give you basic direction, but we all know basic direction. If it was that easy, right, we'd all be printing money all day long. That's why this trading game's not as easy as just finding a correlation. All right, I'll teach you guys all about why I don't trade correlations and what I do trade, obviously, in our free trial here at School of Trade. How about the gold here? So gold and euro looking very similar, so you can probably finish my sentences here with this. We're bearish, but we're trading sideways, and we're right down near the lows of that range, which means, again, sellers, you're looking for bull traps, right? You definitely want to be looking for bull traps. So find all those areas of resistance, those red lines, right? Find all the areas of resistance, all the red boxes and red lines, and then what I'm going to do is I'm going to wait for the buyers to try to push above, and they might be successful. Let's be honest, they might be successful, but the odds are not in their favor. And once it tries to pull back, I'm going to sell right into that stop loss, because if you're a bull, when you get stopped out, what happens? A market order to sell. You know, market orders are the only order types that actually move the market. That's right. Market orders, specific type of order, is the only type of order that moves the market because it will take whatever the market has to bear. So sellers, you guys want to be selling at these resistance areas. 3 ways to do it: reversal patterns, failure patterns, or what was it again? Wait for the turn and take the wave pattern short. Easy. What about the buyers though? The buyers, you guys actually have not a bad, it's still much lower percentage than the sellers right now, but there's a nice resistance area overhead here, and you have quite a bit of room, about 50, 60 ticks here to get to that next resistance area. So what you could do here if you're a buyer is wait for the sellers to try and buy right into their stop losses. That's simple as that. Same thing, except now we're going opposite way, right? Sellers wait for the buyers to fail. Buyers wait for the sellers to fail. Again, don't forget, if you're a buyer right now, though, buying at the low will be the best money you're going to make, the easiest money you're going to make. So stay patient on that for the gold traders out there if you're a bull on the gold. Buying at these lows, that will always be the easiest money to make, right, if you're going to be a bull. But again, if you're a bull, you're on the short end of the stick here, right? You're trading against a trend. So make sure you're looking for quick target, small stop, tighten up that stop, remove the risk. Every trade long at this point needs to be treated as a scalp. It needs to be treated as a scalp until proven otherwise. Guys and gals, don't forget, we'll be trading this market tomorrow morning live in our trade room as well. So if you need more updated information there on the gold, you know where to reach it. And then crude, what are we going to do with you? What are we going to do with this crude market right now? We knew we were bearish. We've been trying to get this market up off these lows to give us better selling opportunities here. We traded this thing short today in our trade room with very short-term trades, obviously. We'll be trading this market tomorrow morning live in real time, right, according to our waves, our breakouts, our scalping strategy. You can learn more about that stuff inside of our free trial. And, of course, beginner, intermediate, and advanced memberships will also learn this stuff. So is there any question about what the trend is? Let's see. What do you think the trend is right now? I'm going to go with bearish, Alex. I'm going to go with bearish. I'm going to go out on a limb here and say we're just a little bit bearish. We heard from Iran today. They're talking about like quadrupling their production pending a nuclear deal, blah, 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 blah. It's amazing. Rig count goes back up. That's great. I saw that news over the weekend, right? Yeah. Hello. Let's put some more rigs in the water. Let's go pumping out some more, right? Oh my goodness. If they were hoping to curb production, it's going to take an act from the oil gods, right, to curb production of this stuff. Apparently, nobody cares about pumping more out of the ground here. They're searching for more ways to produce more in the U.S. Saudi Arabia has, on multiple occasions recently, I don't want to say threatened, but basically touted everybody else, saying, yeah, anytime they want, they'll produce more. They're going into the shale market in 2016. Yeah. Plenty of reasons to think this price is going to go higher here. Pending any big major turmoil in the Middle East, we're talking about big time production increases. Rig count keeps going up here. It did drop for a while there. Last week, what a joke last week was, right? We heard from the DOE last week, and they were, for the first time, we got a build in inventories and price sinks. Anyways, it has been a comedy of errors here coming out of the DOE and the API over the past few weeks, trying to talk some sense into this market. It's very, very clear here. This market continues to be very heavy. It continues to be very heavy. The biggest problem we're going to have right now is getting a correction up off these lows. This is going to sound a lot like it did last week. Big oversold market. We've got to get up off these lows to get a nice opportunity here to get short. I mean, that's really the hardest part about these trending markets. Remember, when it comes to a trending markets can really be a little bit tough sometimes. Here's your moving average. When you're talking about a trending market, sometimes these markets, they just run away. They don't really give you that many opportunities. The best opportunities to make money in a real strong trend is right here, right when we try to reverse. Wait for those buyers to try once, they try twice, right? And then sell right into those stop losses. That's where the easiest money is going to be. Well, we're way down here. So this leads me to believe, buyers, you guys have the key to the kingdom tomorrow morning. Obviously, we know you're counter trend, but Buyers are going to have the short-term opportunities here on crude. Sellers, we really got to be patient here. The best way to be a seller right now is going to be to wait for price to get back to these resistance areas. But even then, you get all this space back to the 200 moving average. So what I'll be doing tomorrow is I'm going to be looking for these sellers, right? I'm sorry, the buyers here. I'm looking for failures basically as a seller here. So as we're going higher, short-term buyer opportunities up to these resistance areas. And then really what you got to be careful about tomorrow is that you're going to see, this just screams a trap right here. Trying to sell this area blindly just screams like a trap. We would expect this price to want to go a little bit higher, right? So what we'll do is, again, buyers, you guys know what to do, right? Buyers, look for the sellers here to take that as a trap and then just buy right into their support. So what I'll be doing is I'm going to play the exact game, but the opposite direction. So I'm going to wait for the buyers to think they got this stuff beat and then sell that failure. That's going to be the easiest way, right? That'll be the easiest way here. So wait till you get resistance. Wait for the buyers to try and fail, and then you're literally taking failure patterns for those trades back to the downside. Again, short-term traders out there, short-term buyers, you guys have the short-term opportunities right now. Sellers, we got to stay patient. Today's runaway market tells us there will be profit taking at these new lows. Short-term opportunities for the buyers on the way up to these major resistance levels overhead where there will be sellers. I'm going to be looking for this area for the best selling opportunities right around this area here, right around that 55 area. 55 has been a pretty popular number, not that really matters much, but we do know that the price is going to try to return to this mean here. Now, guys, I might be wrong. This thing may just fall out of bed right now, and I will trade it short in the very short-term opportunities we see on the way down. I will follow this trend here tomorrow. But what I'm trying to tell you is where the easy money is going to be and where, if you're looking for a more long-term sell right now, this area right here screams like a trap. So I will be looking for buyers to try and buy it, and if they fail, that's when I'll go ahead and sell that, right? I'm not going to jump right into it blindly here. And then back up around 55s, that's where you're going to want to see it. That's where the best selling opportunities are going to come here if you're trading crude here for tomorrow. Again, buyers, you got to get to it quickly here. Remember, you're going technically against the trend, so take a quick first target, tighten up that stop and let it run. If you're a buyer right now, look for these resistance areas overhead to fail. Buy right into those stops and be aware, I'm going to be waiting for that area to see if those buyers fail, right? And that's when I'll be looking to sell short. It's just going to be too easy there for this area right here, 53.88, 54.22. It's going to be easy for that to be one big bear trap as traders come in and they try to sell that low, right? Try to sell that resistance area. So look for it to fake out those sellers, buying right into it. And if it fails from there, though, we know what's going on now. We know what's going on now. We'll be right back to the basics. So sellers, stay patient. That's going to be the key word here for tomorrow for you sellers. Stay patient. Buyers, get at it quickly, and if you find yourself up at these highs up here, find yourself up around this 53.88, 54.22, stop buying for a moment, let the sellers try to take it lower, and then wait for that short-term move lower to fail, and then buy right into those stop losses, and then 55, 55, 56, going to be some good targets waiting for you, and this is what we're looking for, the best tradable opportunities here to get short up around the top of this channel. All right, guys, I'm going to be watching this market in real time tomorrow. Whenever you see a market that goes just bonkers, runaway market, you always got to be careful because there's going to be some gamblers in the market once they see this, right? There's going to be people chasing after it, people taking profit, people trying to be bargain hunters. There'll be a lot of people that say, oh, well, this market can't keep going lower forever. I'm going to buy it blindly now. So just keep in mind, there's going to be a lot of traders in here that come into this market blindly bullish right now. I'll recommend if you're a bull right now, short-term areas of resistance, wait for the sellers to try and buy into their failure. If you don't know what I'm talking about, that tells me you need to be educated. You got to get the knowledge of how this stuff really works. And I look forward to teaching you all of that every day in our live trade room, right? And as part of our membership course here at School of Trade. Guys, don't forget, stop over to schooloftrade.com on the way out of here. Join our free trial. Our free trial is the absolute best in the business. I'll shoot you over an invite to attend our trade room. I'll walk you through our 7 days to trading success. It's a great free trial, probably the best in the business. I'd love to know if you find a better one out there. I really would. We have 3 levels of membership: beginner, intermediate, and advanced. And of course, somebody standing by 24/7, 365 to help you guys out if you need any help along the way. Guys and gals, my name is Joseph. I hope you had a great Independence Day holiday. Thanks for coming back and joining me here today. Same time, same place tomorrow. We're going to be here Monday through Thursday evening this week. No more holidays until the end of the summer, until Labor Day, first week in September. So we'll be here nonstop until we get there, guys. Keep in touch. Tomorrow morning, Trade Room opens up at 8 a.m. Eastern Time with our students here at School of Trade. Nightly newsletter will be back tomorrow night, 8 p.m. Eastern Time. I'd love to hear from you, though. Send me your feedback below the video. JJ@School of Trade is my email address. And be well out there. Be nice to each other. And be here tomorrow, 8 a.m. in the Trade Room, 8 p.m. for the newsletter. My name is Joseph. Adios, amigos. Bye for now.